Welcome back to XRP Update. Today we're diving into one of the most fascinating contradictions in the crypto market right now. On one side, retail investors seem more fearful than ever. Social media is filled with negative comments, frustration, and predictions that the market is finished. On the other side, some of the world's largest institutions and corporations continue making massive moves into digital assets, particularly XRP. So the question is simple. What do they know that the average investor doesn't? Take a look at the current market sentiment. Many people see XRP trading around today's prices and immediately assume something must be wrong. They believe that if XRP truly had a massive future, institutions would have already bought everything available and the opportunity would be gone. At first glance, that argument may sound logical, but when you actually examine what's happening behind the scenes, a very different picture begins to emerge. One recent development attracting attention comes from Japan. A major Japanese company, Remix Point, already known for building a significant Bitcoin strategic reserve, recently revealed that it has also established a substantial XRP position, consisting of approximately 1.2 million XRP. This isn't the behavior of an organization acting out of emotion or social media hype. Large corporations conduct research, evaluate risk, and make strategic decisions based on long-term objectives rather than daily market sentiment. And this is not an isolated case. Across the industry, multiple institutions, investment vehicles, and special acquisition companies have been accumulating XRP in increasingly large amounts. Some hold positions worth hundreds of millions of dollars, while others reportedly hold values approaching or exceeding billions. These organizations employ analysts, economists, legal teams, and financial professionals whose job is to evaluate future opportunities. Yet, despite their continued participation, retail investors are often being encouraged to believe that there is nothing to see here. That contradiction deserves attention. Every day, negative comments appear across social media platforms. Some people confidently dismiss XRP without even taking the time to understand the underlying discussion. They react to headlines, repeat opinions from others, or criticize information they haven't fully examined. Ironically, many later admit they never actually researched the subject. This illustrates one of the biggest problems in modern investing. Too many people form strong opinions based on very little information. Rather than studying technology, adoption, regulation, or institutional activity, they rely on emotion and internet narratives. The crypto market has experienced this phenomenon before. Years ago, one of the most common criticisms directed toward XRP was that it was a banker's coin. Supporters of decentralization argued that connections with financial institutions somehow made XRP undesirable. Yet today, many of the same voices across the broader crypto industry celebrate institutional partnerships, banking adoption, regulated products, and government recognition. The narrative changed. What was once criticized has become widely accepted when applied elsewhere. This demonstrates how quickly public opinion can shift depending on market cycles and prevailing sentiment. For long-term investors, however, the focus is not on changing narratives, but on changing infrastructure. Another major development discussed involves Ripple and Bitso working with a peso-backed stablecoin on the XRP ledger. Think about the significance of that for a moment. A stablecoin represents a digital version of value tied to a traditional currency. Instead of existing solely within conventional banking systems, it operates on blockchain infrastructure. Supporters view this as another example of financial instruments gradually moving into the digital economy. This raises an even bigger philosophical question. Most people measure XRP's future by asking whether it could reach $100, $1,000, or even $10,000. But perhaps that isn't the most important question. The more important question may be this: what will the purchasing power of today's dollar actually be in the future? Because price alone tells only part of the story. If inflation continues reducing the purchasing power of fiat currencies, then measuring digital assets exclusively against those currencies may fail to capture their real economic value. Throughout history, people have often asked whether gold became more valuable or whether paper currencies simply lost purchasing power. The answer depends on perspective. Supporters argue that the same principle may eventually apply to digital assets. Governments around the world continue expanding money supplies, while inflation gradually changes what traditional currencies can purchase. Historical data demonstrates that purchasing power declines over long periods, making comparisons across decades increasingly difficult. This is why many long-term XRP supporters focus less on nominal price targets and more on relative value within an evolving financial system. At the same time, the global monetary landscape itself appears to be changing. Many countries are actively researching or developing central bank digital currencies, while others explore public-private partnerships involving blockchain technology and stablecoins. Regardless of the specific model adopted, one common trend is becoming increasingly clear. Digital forms of value transfer are gaining attention across governments and institutions worldwide. Stablecoins in many ways already function as digital units of account, mediums of exchange, and stores of value within blockchain ecosystems. They represent another step toward a more digitized financial environment. And that's why supporters believe tokenization could become one of the biggest financial transformations of this generation. Imagine equities, bonds, debt instruments, real estate, and countless other real-world assets existing as tokenized representations on blockchain networks. Supporters argue that such a system could dramatically improve efficiency, settlement speed, transparency, and accessibility. Major financial infrastructure organizations have already discussed utilizing distributed ledger technology for enormous transaction volumes. If settlement systems themselves continue evolving through blockchain technology, many supporters ask an obvious question. Why wouldn't the assets being settled eventually become tokenized as well? From this perspective, regulatory clarity could become one of the major catalysts accelerating adoption. Once institutions gain greater certainty regarding rules and compliance, supporters believe the pace of blockchain integration could increase significantly. And if that happens, projects focused on financial infrastructure rather than speculation may receive increasing attention. Among those frequently mentioned are XRP, XLM, and Hedera, which supporters believe possess characteristics suitable for enterprise and institutional applications. Of course, these remain opinions and expectations rather than guarantees. No one can predict markets with certainty. However, history reminds us that many transformative opportunities initially appear uncertain before becoming widely recognized. Bitcoin itself provides perhaps the most famous example. Nearly everyone has heard someone say, "I could have bought Bitcoin years ago." At the time, however, very few people believed it would reach today's levels. Many ignored it, many dismissed it, many laughed at it. Only later did hindsight make the opportunity appear obvious. That pattern has repeated throughout financial history. Opportunities often look risky before they look inevitable. And that's exactly why today's market continues generating such passionate debate among investors. As we continue today's discussion, let's move beyond institutional accumulation and focus on what could be the biggest transformation happening in global finance: the transition from a traditional fiat-based system toward a digital asset economy. This is where many XRP supporters believe the real opportunity exists. And it's also why they remain confident despite short-term market weakness. One of the biggest mistakes investors make is measuring the future using today's standards. Every time someone asks, can XRP reach $100? Can it reach $1,000? Can it reach $10,000? They're automatically assuming that the dollar itself will hold the same purchasing power it has today. But history tells a different story. Currencies change over time, inflation reduces purchasing power, governments expand money supply, and economies evolve. The same amount of money that bought a house decades ago may barely buy a car today. That's why simply looking at a future price without considering the value of the currency itself can be misleading. The more important question isn't whether XRP could appreciate. The real question is, what will fiat currencies be worth in comparison to digital assets in the future? Supporters argue that we're witnessing one of the largest monetary transitions in modern history. Around the world, governments are researching central bank digital currencies. At the same time, private companies are developing stablecoins backed by traditional currencies. Financial institutions are investing billions into blockchain infrastructure, and discussions about tokenization continue to accelerate. These developments are not isolated events. They're pieces of a much larger puzzle. Take stablecoins as an example. Many people think of them as simply cryptocurrencies that don't fluctuate in price. But in reality, they represent something much bigger. They function as digital units of account, mediums of exchange, and stores of value within blockchain ecosystems. In other words, they already operate as digital money. This is why the announcement regarding a peso-backed stablecoin being issued on the XRP ledger attracted so much attention. It demonstrates that blockchain technology is increasingly being used for real financial instruments rather than purely speculative assets. And that's exactly where many supporters believe the industry is heading. For years, crypto markets have been dominated by speculation. The next meme coin, the next trending token, the next social media hype cycle. But institutions don't allocate billions of dollars based on internet excitement. They evaluate infrastructure, they evaluate efficiency, they evaluate compliance, and most importantly, they evaluate long-term utility. That's why tokenization has become one of the most discussed topics in finance today. Imagine a future where stocks, bonds, real estate, commodities, investment funds, and countless other assets exist as digital tokens on blockchain networks. Instead of requiring lengthy settlement processes, transactions could occur faster, more transparently, and with greater efficiency. Supporters believe this isn't science fiction. They believe it's already beginning. Major financial organizations have publicly discussed using distributed ledger technology to process enormous transaction volumes every year. If the infrastructure responsible for moving value is becoming digital, then it becomes logical to ask another question. Why wouldn't the assets themselves become digital as well? That is the foundation of the tokenization thesis. And if trillions or even quadrillions of dollars in assets eventually move onto blockchain infrastructure, then networks capable of supporting that ecosystem could become increasingly valuable. This is one reason many XRP supporters pay far more attention to institutional developments than daily price action. Retail sentiment may fluctuate from optimism to fear within a matter of hours. Infrastructure development takes years. Another interesting aspect discussed is human psychology. Whenever markets decline, many investors begin questioning everything. Social media becomes overwhelmingly negative. People who were optimistic during rallies suddenly become pessimistic. Some even abandon their investments completely. Ironically, many experienced investors describe these periods as opportunities rather than disasters. History repeatedly shows that the greatest financial opportunities often appear during moments of maximum uncertainty. That doesn't mean every declining asset will recover, nor does it eliminate investment risk, but it does illustrate why disciplined investors often think differently from emotional investors. Instead of asking, "Why is everyone selling?" they ask, "What are institutions quietly buying while everyone else is distracted?" That difference in perspective can completely change investment decisions. Another fascinating point is how narratives evolve. Years ago, critics claimed XRP's connection with financial institutions was a weakness. Today, institutional adoption is celebrated across the digital asset industry. Banks entering crypto are now viewed positively. Governments exploring blockchain are considered bullish. Regulated products are welcomed by markets. The very characteristics once criticized have become strengths. This demonstrates that public opinion often changes long after infrastructure development has already begun. And history suggests that by the time everyone agrees on an opportunity, much of that opportunity may already be gone. That is why many long-term investors continue focusing on research instead of headlines. They believe markets reward preparation more than prediction. Of course, no investment is guaranteed to succeed. Every financial decision involves uncertainty. Regulatory developments, economic conditions, technological innovation, and market sentiment all influence outcomes. But supporters argue that ignoring one of the biggest technological shifts in finance simply because of temporary price movements could prove to be a costly mistake. For them, today's volatility represents noise. Tomorrow's infrastructure represents the signal. And according to that perspective, the biggest chapter of the digital asset revolution may still be ahead. As we move toward the conclusion of today's discussion, there's one final point that deserves serious attention. Throughout history, major financial revolutions have always created two groups of people. The first group studies the changes early, prepares and positions themselves before everyone else. The second group waits until the opportunity becomes obvious, and by then they spend years saying, "I wish I had paid attention." Supporters of XRP believe we may be approaching one of those moments. Think about how rapidly the financial world is changing. Artificial intelligence is transforming business. Blockchain technology is changing how value can be transferred. Stablecoins are becoming more widely adopted. Governments are exploring digital currencies, while institutions continue investing billions into blockchain infrastructure. None of these developments exist in isolation. Together, they paint the picture of a financial system that looks very different from the one the world has operated under for decades. This is why many long-term investors refuse to let short-term price action determine their conviction. Markets move in cycles, fear comes and goes, news headlines change every day. But infrastructure takes years to build. The people building highways don't stop because of bad weather for one afternoon. They continue constructing because they understand the long-term objective. In the same way, supporters believe blockchain infrastructure is being built regardless of daily market sentiment. Another lesson discussed is the importance of experience. Many voices online speak confidently about markets despite never having lived through a major crypto bull cycle. They analyze charts, predict prices, and criticize projects, but they've never actually experienced what happens when capital rapidly flows into the digital asset market. Those who have lived through previous cycles often describe them very differently. They remember exchanges becoming overloaded. They remember systems slowing down because of massive trading activity. They remember opportunities appearing and disappearing within hours. Most importantly, they remember that preparation mattered far more than emotion. This is why strategy becomes just as important as investment selection. Buying an asset is only one part of the equation. Knowing when to take profits, how to protect wealth, and how to access liquidity are equally important. Many investors spend years thinking about accumulation, but almost no time planning what happens after success. The discussion emphasizes that wealth preservation requires planning before the opportunity arrives, not after. When markets eventually accelerate, everyone will be trying to make decisions at the same time. Those who already have a strategy will likely make calmer and more rational choices than those acting under pressure. Supporters therefore encourage investors to think beyond today's market and prepare for tomorrow's possibilities. Another powerful idea presented is the importance of surrounding yourself with knowledgeable people. Throughout history, successful investors have rarely succeeded entirely alone. They learned from mentors, exchanged ideas with like-minded individuals, challenged one another's assumptions, and developed strategies together. Knowledge compounds just like investments do. The more informed your decisions become, the greater your ability to navigate uncertainty. This is especially important in an industry evolving as quickly as digital assets. Technology changes, regulations change, markets change. Strategies must evolve accordingly. Perhaps the biggest obstacle facing most investors is not lack of opportunity, but lack of preparation. Many people delay learning. Many postpone planning. Many tell themselves they will study the market later. Unfortunately, history shows that opportunities rarely wait for those who procrastinate. By the time everyone agrees something is valuable, much of the potential upside may already have occurred. Supporters believe this is exactly why education matters today. They argue that understanding blockchain, tokenization, stablecoins, and institutional adoption today could prove more valuable than simply reacting to future headlines. Of course, it is equally important to remain realistic. No investment guarantees success. No technology is certain to dominate. Markets are influenced by regulations, economic conditions, innovation, competition, and countless unpredictable events. Every investor must perform independent research and make decisions appropriate for their own financial circumstances. The discussion presented today reflects a long-term perspective shared by many within the XRP community, but it should never replace responsible financial planning or personal due diligence. Still, one fact is becoming increasingly difficult to ignore. The conversation surrounding blockchain technology is no longer limited to cryptocurrency enthusiasts. Banks are discussing it. Governments are discussing it. Institutions are investing in it. Technology companies are building around it. Financial infrastructure is evolving because of it. Whether XRP ultimately fulfills the expectations of its strongest supporters remains something only time will answer. But many believe that history is once again presenting an opportunity that most people fail to recognize while it is happening. Years from now, people may look back and ask why they ignored digital assets during their early stages, just as previous generations look back at Bitcoin and wish they had paid attention sooner. For long-term believers, this is not a time for panic. It is a time for preparation. It is a time for education. It is a time for developing a strategy and staying focused on the bigger picture rather than temporary market emotions. And if the transformation of global finance unfolds the way many supporters expect, today's uncertainty could eventually become tomorrow's opportunity. As always, this video is for educational and informational purposes only and should not be considered financial or investment advice. Always conduct your own research and consult qualified professionals before making any investment decisions. If you enjoyed this in-depth analysis and want more premium coverage of XRP, blockchain adoption, institutional developments, tokenization, and the future of digital finance, be sure to subscribe to XRP Update, turn on notifications, and share this video with anyone who wants to stay ahead of the biggest financial transformation of our generation. Thank you for watching, and we'll see you in the next XRP update.